Hey everyone, Ben here and welcome to Motivation to Invest. Chinese stocks are crashing hard right now. It's a real bloodbath out there. So it's now the time to buy on the volatility, sell or hold. Firstly, let me just say, everybody just relax, take a deep breath, because we've been here before with Chinese stocks. And in this video, I'm going to discuss the truth about delisting of Chinese stocks and what that means for your portfolio, because there's the real major truth which nobody seems to be talking about on mainstream news. It's all just fear, but nobody's actually talking about what actually happens when a stock is delisted. Because let's say a major company like Alibaba, it got delisted from the New York Stock Exchange. If that did happen, is the company not going to continue selling its products? Is the company's website going to shut down? Is Jack Ma going to go in hiding again? No, none of these things are going to happen. The business is still there. There is a lot of risks in terms of investors, in terms of regulatory risks, and in terms of the discount which actually occurs for shareholders who are buying these stocks in countries like the US. However, in terms of the actual businesses, they're still alive and well, but it is a lot more difficult to actually invest into them. So I'm going to be discussing all that and much more in this video. So before we get right into it, guys, let's just give this video a big thumbs up for the YouTube AI. If you haven't joined the investing family and you do like these real-time updates, hit that subscribe button, turn that notification bell on. First link in the description below for our Ultimate Investing Strategy course or our VIP membership group, where I give live updates on exactly which stocks I'm buying, selling in real time. So when the S hits the fan, as they say in the UK, then you know I'll be with you guys to support you guys, discuss with you guys about your own personal portfolios, and you'll know exactly what I'm doing during times of volatility. So with that being said, let's dive in. So let's kick things off. I'm wearing my red shirt today for you guys because there's a real bloodbath out there with Chinese stocks. So let's hop right in to this volatility. So straight off the bat, we'll hop into an ETF. This is the iShares MSCI China ETF. So this is a basket of Chinese stocks. We can see from the February high in 2021, that ETF is down 22%, so major drop. Is it just because of China trade tensions? No, it's because of a variety of issues, but still, that is the main cause of this major plummet. Hop into a stock like Alibaba again. As you know, early in 2020, I believe Jack Ma went missing, and then he appeared again, the founder of Alibaba, of course, the major e-commerce player in China. They call Alibaba the Amazon of China. So it was $300 per share October 2020, and that stock slid down by 34%. Now, this is a real major large cap company, so to slide by 34%, it'd be the same as seeing Amazon slide by 34% in the US. Now, the interesting thing with Alibaba, I do want to point out real quick for you guys, which I'm going to get into a bit later in this video, is major value investors were buying just before the major regulatory lockdown in China. So you have people like Charlie Munger, Warren Buffett's business partner, Manish Prabhai, legendary value investor, and of course myself. We were buying Alibaba heavy. And to be honest with you, I think that's probably one of the safest bets in China right now. But I'm going to get into a little bit more about that a little bit later in this video on the exact buy point and the exact valuation that those legendary value investors were buying this stock at, and also my own personal valuation of Alibaba. Okay, on to the next stock. We've got Tencent, that's also down heavy. Now, DIDI, now this one is a real sort of sore spot for many investors, because this company recently IPO'd, and it is always risky buying a company at the IPO because there's a lot of hype behind the stock. Tends to pump up and then have a bit of a correction down. But this is not a little bit of a correction. So DiDi's the Uber of China. So it went public around $14 per share, had a bit of a run up 16%, and then corrected down by 50% because of this major regulatory and pressure from China. Now, China's actually specifically pointing out this stock, and there's actually a few US courts actually suing this company because they're basically saying on the behalf of shareholders, such as many of you guys who may be watching, they're actually saying this is really wrong because the company must have been aware that they were having a lot of this pressure from the Chinese government, because their app was actually delisted from the App Store by the Chinese government, and literally just a few days after the IPO. So the courts in the US are basically saying, DiDi, you must have knew that that was going to happen, or at least you could have informed shareholders. Yeah, we knew about the general risk of the China government regulation and China's government's fines, but not that specific risk. So that was really wrong there by the management of DIDI, or maybe, I don't know, maybe there's some other issue that we don't know about. But really, China is actually trying to hit this company really hard right now. So just 2 days later, Chinese internet regulator launched an investigation into the company over how it collects user data. Now, this is not like companies in the West like Facebook with Cambridge Analytica, because there it's the people's data and they're sharing it and they shouldn't be sharing it. In China, it's more like they want to have a monopoly on the data of their citizens so they can control their citizens. Now, I'm not saying anything bad about the Chinese government, so before the Chinese government decides to shut down my YouTube channel, but guys, the Chinese government likes to have this control. That's just how they run their country. Obviously, in the West, we run our countries our way. They run it their way. We can go over whether that's right or wrong. Most likely not that right, but that's just what they do. So as investors, if we want to take advantage of this growing middle-class population in China, this huge population in this economic boom, they've been one of the least affected countries by the whole global pandemic, which is really ironic, then we have to actually bear the brunt with some of these Chinese stocks and the major volatility. But real piece of advice straight off the bat, guys, from the bottom of my heart for all of you guys, please do limit these stocks in your portfolio. Diversify your portfolio. I'm not going to do a Jim Cramer and do complete U-turns every video. I will say to you guys from day one, always diversify. We're aware of this regulatory risk. And also the real question is, do you sell like many of these people will tell you to do on CNBC? My advice, personally, at this point in time, obviously it's not financial advice, guys. This is just the same advice I give to myself. At this point in time, I think it's completely wrong to sell during any bad news. I'd just wait for good news. Even if something just happens in the future or the company does get delisted, which I'm going to actually show you what actually happens, the truth behind delistings a little bit later in this video. The real goal of investing, as I'm going to show you here, guys, this little picture here, very, very complex graph this is, but this is what the legendary investors all know about. And the simple goal of investing is to buy low and sell high. But what most investors do, most people do, because of psychology, because of fear, is they'll sell low and buy high, which is completely the opposite of what you should do. Is here's what happens if you own a share of a Chinese company that gets delisted. So what actually happens, as I mentioned at the start of this video, the company's website doesn't stop selling product, the company's employees don't get fired, the company's management doesn't go into hiding, the company's still there, it's still alive and well, and it's still serving its customers. So what really happens, the way these Chinese companies are set up, is they actually have a shell company in the Cayman Islands. And as Western investors, we basically invest into what's called American depository shares. So we're invested into the shell company, and the shell company owns the mainland company, which is based in China. Let's say it's Alibaba, it could be any of these Chinese companies. That's the setup. So we're not directly invested into the Chinese company, we're investing through the shell company in the Cayman Islands. That's just basically how it works to get around China's regulatory issues. But let's say a stock gets delisted. What happens then? Well, let's say it's off the New York Stock Exchange. Well, what will happen is the liquidity of the stock will be affected massively. So these major institutions, they won't be able to buy and sell the stock easily, which will affect the valuation of the company. However, you could still buy and sell the stock most likely on the OTC stock exchange, which is the over-the-counter stock exchange. And this has happened with a few companies which have been delisted before. So when a company is delisted, this is the truth nobody's talking about, guys, and I just have to get this out there for you guys to help you guys out. When a company is delisted, you can still buy shares, you can still sell shares, it's just the valuation's affected. So personally, I like to give, let's say a stock, give it maybe a 20% hit at least, because of the liquidity issues. But yeah, you can still buy, you can still sell a stock. And I'm going to give you a few examples of what's happened previously with Chinese stocks. So here's an example right here. So last summer, Chinese coffee chain operator Luckin Coffee, now this company has actually had major accounting fraud, was delisted from the NASDAQ after the company revealed fabrication of 2.2 million yuan or $340 million in sales. So that actually is quite common with Chinese companies. I do like to stay away from any of these Chinese companies which have these accounting issues, accounting trickery. But here's what happened after the delisting. So that wasn't the end of the company. So when the delisting was announced, the stock actually hit a 52-week low of 95 cents per share, which is extremely low. However, after being delisted and being put in the over-the-counter stock exchange, the shares actually rose to $8.64 each. Here's the crazy thing about this, guys. That's a 10x. So the stock actually got absolutely hammered down to 84 cents and then went up to nearly $9 per share. That's a 10x after a delisting. And this is for a fraud company with major fabrication and accounting issues. Most of these companies which China's government's actually attacking and the US government may potentially delist also, they haven't got these accounting issues as far as I know. The major tech giants, they've been audited by major accounting firms. So to me, to see a fraud company actually 10x after going over the counter, that does give me a little bit of peace of mind for the Chinese stocks I've personally got in my own personal portfolio. Okay, so what's the real major risk with these Chinese stocks? Well, there is a chance for Chinese stocks that you could permanently lose your invested capital. So that is a major risk, and that is why I'd always diversify my portfolio and wouldn't allocate more than a certain percentage, let's say 10%, 15%, into these Chinese stocks, into these Chinese growth stocks, just because of these issues. But selling at the bottom is not the solution, guys, or panicking because of fear on mainstream news is not the solution. We need to know the facts, and that is what I hope to bring to you guys on this channel on Motivation to Invest. Hope to actually bring you guys the facts, because even if this video doesn't get any views, any clicks, I don't really care, because I'm spitting out the real information, the real truth, in order to help you guys out in the market. And that is my mission, and has always been my mission on this channel. If you guys do appreciate that, big thumbs up, guys, to help out with this video. If you haven't subscribed, feel free, whack that subscribe button, hit that notification bell on. Remember, first link in the description below if you want to access my ultimate investing strategy course and join our thriving VIP community, where I'll be able to hold your hand through any crisis, any ups and downs in the market, which we all experience on our own investing journey, on our pursuit to financial freedom. That being said, thank you guys so much for watching. I wish you all the best in the market, and I'll see you in my next video. Invest safe.